Hey, good morning, y'all. Thanks for joining me today on a Sunday. I know it's a little early, but today is December the 5th. It's about 7:10 a.m. And yeah, I'm an early bird, the early bird gets the worm, as they say. But I wanted to talk about something different today. As you can see, I have a little something up here on the screen, but I wanted to go over intrinsic value. So, how many of y'all know what intrinsic value is? Well, the intrinsic value to me is it's kind of like the value of a stock, but as what we're projecting it to be in the next, 5 to 10 years, and comparing that to where it's at today at the current price. So the intrinsic value, we take into consideration, their operating cash flow, short-term, long-term debt, short-term investments, and as far as what they have on hand, as far as free cash flow, and comparing that to their operating expenses and their debts, and just trying to project if they're going to be making money, having available cash looking forward, or they're going to be, eating at that cash flow as the years go on because they're having to pay off their debts that are higher than what they're actually making in revenue. But just keeping it short here, just kind of wanted to just go over a calculator, more or less, is what you see up here. It's just something I've been working on over the last few weeks. As you can see, I have a running rate go for the next 10 years here, going off of the projected cash flow and the company value, and we use a discount factor here, which is kind of used going off of the beta here. So the beta itself is pretty much just an indicator letting you know how volatile a stock is compared to the indexes in the market. So as you see, a beta of 118, well, the index is at 1. So the closer we are to 1, the less volatile the stock is going to be, or anything under 1, the less volatile the stock is going to be. So if you have a high beta, of 150 or more, the stock is looking to be real volatile, or it'll probably have a lot of price action swings, up and downs, and things like that. So long-term trading, when you're trying to invest in something long-term, I would like to look for something less volatile, so you don't got to be worried about your money dipping every time something happens in the market. Now right now, I know we see a lot of selling going on in the market. A lot of these prices are hitting lows. Reason why I wanted to throw this video out there for y'all, just so y'all can kind of get an indication on what to look for, especially when there's an opportunity to buy something. But right now, there's been a lot of names floating around, and I just started digging into these yesterday. I haven't really had time. I started working on the calculator here, is trying to just tweaking it here and there. Like, I don't even want to say that this is 100% accurate. I don't want y'all to hold me to that. Everybody calculates the intrinsic value differently depending on what they want to add and factor in their assumptions and projecting what it is that they want to look at, right? But just going off of what I'm hearing, names that I'm using, the math that I'm familiar with on how these things work, and the comparison as far as running some of these stocks and comparing to what they are in the market, we kind of show that they're pretty similar as to what we're looking at, what we're projecting, and where they're at today. But as you can see here, I do have some of these ticker symbols I've been kind of looking at, trying to find out, if some of these stocks are a good time to buy, are they overvalued, undervalued, things like that, how much cash flow they have at hand, and as far as what they're looking to do over the next, few years to come. Now, I myself don't necessarily invest into something for 10 years, or I haven't yet. I've only been investing in the market for a few years here. But as I start getting more familiar with what I'm doing also, these are certain techniques and strategies that I'm starting to pick up, and I'm going to try to use a lot more frequently now. But just to give y'all a taste of what it is that I'm actually doing here and what I'm looking at, I just kind of wanted to run through exactly what this does, how this calculator works, and seeing if this is something that y'all can use. If this is something that's helpful for y'all as to how I run these fundamentals and project what it is we're looking at, if it's a good time to buy in some of these stocks, just give me some feedback. Let me know what y'all think, and I can start pushing some videos out on this as well. But let's go ahead and check out what we're looking at here, y'all. As you can see, got the stock calculator here in blue. Got the running rate for the next 10 years of what the cash flow is looking to project, as well as how the company is looking to be valued at over the next 2 years. So as you can see, Disney's on an uptrend going off of their cash flow and the assumptions that we're having off of their cash flow from operating activities. Their current and long-term debt, no current debt, a little bit of long-term debt. But this growth rate also, everyone uses a different growth rate. There's a certain way of averaging this out depending on how far back you want to go. As far as the growth rate that I'm using, this is just something that I'm estimating going off of the EPS for the next 5 years. This is something I may need to tweak a little bit more. Let's start checking this to other people's projections. I want to compare what I'm doing to other analysts and the price targets that they're mentioning and seeing why theirs is a little higher or lower than where I'm at and what I'm showing on my data that's available. But this also has a lot to do with your data source. I use Morningstar and I also use FinViz. I know a lot of people may use Yahoo Finance and things like that, but there's a lot of different data sources out there. But this is just something that I'm using and what's available to me and what I'm familiar with anyways. But let's go ahead and just jump right in here, y'all. As you can see, Disney right now, we're showing it overvalued comparing to where it's at today. Right now the price is about $146, and going off of the fundamentals that are available in Morningstar and FinViz, I'm showing that it's only valued at about $115. Now I know there's a lot of things that people are talking about when it comes to the future and where we're moving into this new metaverse and things like that, and Disney, I think, is going to play a big role into some of those things when it comes to their characters and their animations and things like that. But right now I'm not sure what it is that they're actually factoring in to where they're looking at a $200 plus price target. I'm not sure if it's the growth rate itself that may be projecting this a little more, because if you could increase this will increase as well, or if you bring it down, it'll change also, So they're looking at maybe 115% growth rate, or what is it, 40%, I'm sorry, 50%. But all that makes a difference. So if we can tweak that a little more depending on where I'm at, this is where I like to compare it to other analysts also. So this is one that I'm going to wait on. I'm not necessarily going to add it because, as you can see, I'm showing it overvalued. So I want to kind of tweak this a little more and seeing what it is that I may need to factor in, comparing it to what these other analysts are looking at with their price target of about $200 plus. Let me go ahead and update this here. Alright, y'all, so let's go ahead and let me show you how I run this here. This is pretty neat. This is things that I like to do as far as the work that I do. I like to build reports and just trying to make it easier and more efficient for us to look at certain criteria or certain numbers and metrics and things of how to measure our business, But the way that I'm doing this is just a quick pull and dump going off of a couple of websites. I like to use Morningstar. This is where we get a lot of the data as far as the balance sheet and the cash flow and the income statement. And then I also like to use FinViz, because FinViz kind of already does their own quantitative analysis, and they kind of have a breakdown of everything that I need here. So I like to just grab everything at once rather than having to go back and forth, trying to punch in every single cell that I need here. But let me show you how I do this. Let me go ahead and clean up the data. We're going to pull up one that I actually wanted to point out and one that I wanted to see. As you can see, I got a few up here on the charts here, and we have some good ones that I wanted to look at as far as Intel, and then Pfizer is also, I think, some real good buys right now where you can get in and probably double your money at the moment. Not necessarily showing you when as far as how long it'll take for this to reach that level. This is something that you would have to invest in long term. I'd have to do a deeper analysis to try to give you as far as those time periods and things like that. But it's just going off of the value of the company itself compared to where it's at today. These stocks are undervalued going off of what I'm showing. But let's go ahead and let me show you what I'm looking at here. So I have a macro. Let me go ahead and clean up the data. I need to add the button so I can do this a little bit better. But first we're going to pull the Morningstar balance sheet data. So when you go to Morningstar, type in your ticker symbol here. So for Intel, INTC. So as soon as it pulls up here, we're going to go to the financials. Now in order for you to actually do this yourself, you do have to have Excel or Microsoft Office in order for you to export these files. You can always look at it on the website itself, but in order for you to actually pull the data, the raw data out, you would have to have that software installed to use it. But off the back, we want to pull the balance sheet data, and we want to pull it in the last quarterly that was posted here. So we click on balance sheet quarterly. We're going to go to the details view, and as soon as you come in here, this is all the data that we need here. But you see how having to scrub through everything and looking for everything is labeled depending on what the company is actually posting. It could be in a different place than you've seen it before on a different company. So I try to make it easy. I just export it to Excel here, open it up, copy everything in there. I'm gonna go back to the calculator, and then I have some formulas in here that I've already preset, and it's gonna give me everything I need to know as far as when I paste it and what I want it to do. So first we're gonna get the balance sheet data, then we're gonna go to the Morningstar cash flow data. So there's 3 pulls that we're gonna need to do. So first one's the balance sheet, second one's the cash flow, same thing, quarterly. We're going to export that. Okay, and then as you see, I have them labeled here, cash flow data, Morningstar. I'm going to put that one there. And then we want to get the FinViz data. So with the FinViz data, this is just a real quick copy and paste. So right here, we're just going to highlight all that, copy it. And we're going to go to the FinViz part. And I've already broke this down too in formula to give me what I want to see. Is that right? Oh no, wait, sorry. Let me go back. I need Intel data. So INTCs, you can see here's a chart right here showing where we're at, 49 bucks, and still on an uptrend, similar, more or less, come down a little bit, but we're still holding that uptrend. We're going to go ahead and just copy that data there, right? And we're going to paste it over that. Alright, so once everything's pasted where we need it, we're going to go back to the calculator here, and everything should be open, but there is a couple of things that we're going to have to tweak here before we can get a full analysis or on the fundamentals behind what the company's doing. So off the back, as you can see, I have some cells that show input. These are the ones that we got to update going off of what the data that was provided. So right now, this is the number of shares they have outstanding. As you can see right here, there's 4,060,000,000 shares outstanding. So let's update that. 4,060,000,000 shares. And the number of float shares, 4,040,000,000, 4,040,000,000. And right now there's a short interest on this one of 170, and not a lot of short in this. It means it's pretty bullish. A lot of people know this price doesn't really come down too much. It's been on an uptrend. And then right now we want to add the beta on the discount rate. So this is going to tell us on how volatile this stock is, and as you can see, the beta is less than 80. So 52, meaning this stock is real. It's not that volatile, meaning this stock does not move a lot in the market. If it does move, it moves slightly. So that's a good thing for long-term investment, meaning you don't got to be worried about your money going up and down or taking big dips and having you there biting your nails and stuff, you know. So that's a good thing. So we want to update the discount rate here. So it's less than 80. We want it to be 5%. And bam, there you go, y'all. So this will give us a breakdown on everything the company is doing. So right now this is Intel. There's the ticker symbol. And right now their cash flow from operating activities, you're looking at $34,084 million. Their cash flow from investing activities kind of took a little hit there, but it is investing, so it isn't incorporated into or factored into these calculations here. Right now, the current debt, they have no current debt. Long-term debt, you're looking about $35 billion. Long-term, though, depending on how long it takes to be paying off, as long as you can see this being knocked down, you know, year to year, that's always a good thing, or at least quarter to quarter, or however you want to measure it. Year to year would probably be the best way. You can see that debt getting knocked down, and yet their cash flow is still holding steady or increasing. It's always a good thing. And as you can see here, their cash equivalents, and short-term investments about $34,006 million. So as you see, we're looking at the stock is undervalued right now. The intrinsic value before their cash and debt, it's about $76. They have no debt. so we're not going to deduct the debt. And then they have cash flow per share about $8.53. So right now their current price is about $49.25, but the intrinsic value at the end of the day, $76, y'all. So $50, you're looking about, 25% upside, which isn't a bad thing. That's actually a good investment for a stock that's not real volatile. So if you want to throw some money in at 50 a share right now, get in, hold it down over the next however long. It's kind of like having a bank account, but your bank account ain't making you money. Eventually this has got to go back up. I know they got some things going on over the last few years. They've been a little slow at producing their, I believe, their microchips and things like that. As far as their partnerships, they kind of, ended up going in different directions. But I think, don't hold me to that. I got to do some more research on this company itself. But I believe this year, 2022, they got some big things coming on a new partnership and development of some of these microchips. So hopefully that could speed up this price to get to moving. But again, it's something you just got to watch and keep in mind. If you're going to invest in something like that, just keep an eye on it, y'all. It's not real volatile, so even if it does decide to move up and down, you probably ain't going to see it happen overnight. There'd have to be some big news to be published on this to actually give a big boost in this price here. But as you can see, going over the history, we've had those jumps here in the past. And this actually was this year. Early this year, we've seen a big jump in the price. And, we may see that again in the beginning of this year. So right now, I think this is a good opportunity to buy in, going off of the fundamental analysis here. And we can possibly get it back up to $100 or so. You never know. We're projecting their value of their 10-year cash flow will be about $406 billion over the next 10 years. So right now, company value is kind of on a downward trajectory, but cash flow is still steadily moving up. So we need something that can kick the value of the company back up. Hopefully the next play they have coming next year can do that for them. Right now the EPS expected for next year is at a negative. This year we're up 4.90% or about $5 on a share there. So yeah, y'all, this is kind of how I like to look at these stocks and kind of value these. But you can see this gives you a breakdown on everything you need to know fundamentally. Now you can always do a technical analysis on these, looking at the charts, which I also like to do when I'm day trading. But right now the market is coming down to a low, and right now I'm looking for some good buys. And as you can see here, INTC, we're looking for a good buy, so check mark on that one. So let's just cover one more stock here. I can't really go through every single one of these today. I don't want to keep you up on here all morning. But let's look at Pfizer, y'all. Pfizer's another one that I think is a good one. Corona and all this going on right now, all these new Omicron viruses and talk. They're producing, massive amounts of these vaccines, and they've been literally doubling up. I believe they're at a low of $35 a few months back. They've already doubled up to almost $60, and we're actually looking to almost hit $100 here real soon. So you see Moderna, you see a lot of these other Johnson & Johnson, all these other vaccine companies, man, their prices are in the hundreds. Pfizer's at $50 or so right now. Let's go ahead and look exactly what's going on with Pfizer though, right? So let's go ahead and check Pfizer out here. We got Pfizer. And just look at that, man. Over the last month, from 40, 45, $10 increase, y'all. And we're on that bullish run now. So off the bat, let's go ahead and just copy that FinViz data. Let's go ahead and dump that right there. Go to the financials, balance sheet, quarterly, and details view, export to Excel. Some good coffee. Copy all. Clean this up here. Go to the macro. I can always show you how to do these also. If this is something you want to learn about, creating macros also. Just a little cleanup macro there. Nothing real, real crazy. Gonna dump that one right there. And let's get the cash flow data. go check it out here. All right. So first we're going to update our inputs there. So we have 5,610,000,000 shares that are outstanding. 5,610,000,000. And short, I'm not using the short metric here on anything, but it's always good to have that updated just to give you an idea of where we're at. Let's go ahead and update that. 5,590,000,000. So right now, there's not much short on this stock also, 1.14%. And as you can see, we're looking undervalued also, y'all. Look at the trajectory on this one here, the projected cash flow, and the company value on that uptrend over the next 10 years. Yeah, we got to update the beta, which is also at 5%. So you can see we're at 0.67, which is less than 80. So 5% is a good percentage there. Growth rate over the next 1 to 5 years, 13.80% over the next 10 years. We'll just keep that where it's at for right now. Again, this is something that can change over time. So right now, this is the way we're going to look at it calculating. This year, we're actually lower than where we should be at 33% under, I believe, compared to last year or the year before. We took a dip, I believe, in the market earlier this year. We're actually from those previous lows, 2020, back to 35 bucks. So going off of those highs, yeah, we had that little low. But again, we'll be looking to move back up here real soon. But let's look at the numbers here, y'all. So the cash flow for operating activities about 32,291,000,000. Cash flow a little negative from what they're investing in their activities there. Current debt, a little bit of current debt, but their cash flow can pay off their debt, so that's a good thing. It's always less than what they're bringing in, so that's a plus. Long-term debt, a little high, but something that they can also work on there. They have 29 billion cash and cash equivalents, not too bad. EPS this year, $3 on a share. Earnings per share, about $3 on the 12 trailing months there. The trailing 12 months, I'm sorry. But intrinsic value before the cash and their debt, they're looking at $92 a share. We take their debt, which is about 17 cents a share, and their free cash flow per share is about $5.29 a share. Current stock price $54.27. Final intrinsic value, you're looking at about $91. 25% above that $91 target, you're looking at about $114 on the high end. $91 on the low end. That's a nice valued stock right there. You're looking to double your money easily. You already know as far as what this company's doing, what they're producing. You've seen already over the last month or so how the price has been moving. We're moving into the end of the year here, into the new year. It's getting cold. New vaccines looking to be developed. New viruses. Like, oh my God, it's so crazy out here today. But you know, this company's looking to be profitable over, you know, capitalize on what's going on. And that's just the way it is in the business world, y'all. But you know, if you like the way these numbers is looking, these are looking good as far as how this calculator works, and y'all feel like these are some comfortable stocks to invest in. Y'all know that people want to look at the price and think, is this an expensive stock? You look at 54, yeah, that's real pricey. I look at it too, not knowing what's the stock or what the company's doing. But when you look at the value of what they're worth to where they're valued at today, just look, they're worth $91 a share. Why are they at 54? Bad news. Maybe they haven't been producing to their expectations that people are used to, whatever the case may be. But at the end of the day, they're holding money. They're going to be doing something with this money eventually. They're not going to just be playing with it, you know. But do some news, y'all. Do a little research on some of these companies, you know. IMTC and Pfizer, they're looking to do some big things here, y'all. But let me know what y'all think on these videos. Let me know if this is something that y'all like to see. I'll continue posting things like that. If there's something specific y'all want to look at just to see where the fundamentals are behind one of these companies, always feel free to leave some comments, some feedback below. Thumbs up, always appreciate it. And if you want to be in the know every time I drop a video, you have to subscribe, y'all. So go ahead and hit those buttons, and We'll be updating y'all soon here on the next video, and we'll catch up with y'all again. Peace out.